Okay, let's go ahead and work on October. This time we have a special mode of booking. We showed it before in desktop. Now we'll show it in QuickBooks Online. What it is we'll be booking off the statement, right? So we'll go straight into reconciliation mode and we'll be booking in reconciliation mode of the statement, right? Kind of combination of the two. Now again, all of the invoices and receipts are lined up behind the statement. So we'll enter reconciliation mode and we'll be in there again booking of that statement. So again, let's go ahead and get started. So first, go straight to reconciliation. And in this case, we're dealing with our credit card. All right, we're going to enter our ending balance. All right. And we're going to use general journal entry, so we will not enter anything here, just again for consistency to continue practicing our general journal entry capabilities and continue to demonstrate how powerful that is. Anyway, we have our ending balance, we have our date. Let's move forward. So as you can see, there's absolutely nothing there right now, right? But we still have all these transactions that we got to book. Okay, so let's work on it. So first we have our soft drinks. So again, let's go ahead and using general journal entry interface to book it. So in this case, we're booking our credit card. All right, so this one is a credit card. We know this much, right? So again, liabilities go up, and therefore they have to be credited. And let's make sure we enter the correct date. Oops. What's going on? Hold on. 10, 8. Here we are. All right, so we're spending money on our drink purchases, right? So expenses go up here. Again, account 6300 is debited, therefore it goes up. Account 21100 is credited, liability goes up. Again, we could click Save and New and continue booking the next one, or we could continue booking everything in here and then just change it to the end of the month. So again, let's just book everything that we can, right? And one big entry and see how that works out. So we're gonna change that to the end of the month. That's already credit card November. Let's just enter descriptions here. All right, what's the next one? Gas station, right? Okay. So again, our credit card liability goes up. It goes up when it is credited. Again, let's update this description. And our fuel expense goes up, and fuel being an expense, 63,200 goes up when it is debited. Right? All right, let's continue. Right, we can do more. All right, we have a purchase of some food supplies. Right, so again, we have our food purchases supplies. That's an expense. It goes up. All right, let's make sure we enter the invoice number for reference. What else is happening? Well, we know our credit card liability. We're still booking credit card, right? That one goes up. And liabilities go up when credited. So here it is. Do we have another one? Yeah, we have to go packs. All right, so once again, we have restaurant supplies. That's an expense. It goes up when debited. Again, let's make sure we enter correct one here. And what else is happening? Well, again, we continue booking credit cards, so all of those expenses go against our liability, right? Because we're borrowing to pay them. All right, so here it is. And alternatively, we could have entered everything as a lump sum, but then it would be We would have less detail as a reconciliation as far as the lump sum for the credit of the credit card. In this case, we just, we're doing it in one huge transaction, but what it allows us to do is to have that level of detail during reconciliation. So let's continue. What else we have there? We have our cell phone, right? So again, telephone expenses go up. Expenses go up when debited. All right. What else is happening? Well, we continue booking credit card, right? And liability goes up when credited. Again, we could have entered all of these amounts, right, as one large lump sum, but then we would have sacrificed the detail during reconciliation. So this is one way to, again, work in a crunch mode, enter everything in one transaction, one large transaction, but at the same time retain the level of details during reconciliation. And we'll see that in a few minutes. And then we have our transaction receipts for the payment, right? We're paying down our credit card. We covered that before, right? But let's do that again. So liabilities, when they're going down, they have to be debited, right? And right now, this transaction, it's a payment from our bank account to our credit card to reduce our liability, to reduce our credit card balance, right? And the money is coming from the bank account, right? It has to come from somewhere. Bank account is an asset, so it has to be credited right here, right? So it's being reduced. And we have one more gas station receipt. All right, so again, what's happening? Well, liabilities go up because we borrowed to pay for that fuel. All right, but let's enter the correct one. 769. All right, but what else is happening? Our fuel expense goes up. All right, and as many times before I mentioned, and this is a perfect opportunity to demonstrate it. Look, we have 14 line items, right? Debits and credits, right? What matters at the end is that the sum of debits and the sum of credits equals, and they do, right? And what we just did, we booked everything, all credit card transactions, well, except for a couple, and we'll see those in a little bit, right? That's why we reconcile. We booked them in one entry. So let's go ahead and save in new. All right, let's go back. So see now things are starting to show up, but we also know it's not everything, right? Quite. So here's our payment. Excellent. Here's we can start. But see that level of details when we entered it? That's what allowed us to have these individual line items here. We could have lump sum it, but then it would be one lump sum. Again, it's a sacrifice as long as we're reconciling. Again, as long as we're satisfied with that approach. That's good. We're off $36, right? And that's evident. It's right here. That's the interest charge. So let's go ahead and book that one. Okay, end of the month. So here it is, interest. Again, we know this much, that interest finance charges go up. It's an expense, has to be debited. All right, we can enter this description right here. And then what else? Well, they're going to add this amount to our liability, right? So our liability, our credit card balance is going up. Liabilities go up when they're credited. So here it is. We're going to book this entry right here. Debits and credits are in balance. Okay, so okay, we're going to go back to our reconciliation. Here it is. It's $36. All right. And we're at zero, right? That's what we wanted with our reconciliation. We're going to finish now. Done. View our summary. In this case, it's credit card. Here it is, right? Again, let's double check. Balance matches. Payment matches. Transaction match. All right. Here's our $36. And again, you see, even though we entered it as basically, well, two transactions, we booked $36 separately. We retain all the level of details by hitting the credit card account each individual time and entering those amounts individually. And that allows us to book it. Okay, so that completes reconciliation of the credit card. You can go ahead and print it, right? And then attach it to the credit card statement. and that would complete reconciliation of the credit card statement for the month of October.